The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Wednesday, the 20th of January, 2021. On the podcast today, Andrew Duxbury, Finance Director of Galliford Try, discusses their trading update, which reveals they expect a return to profitability and have more cash than their current valuation. And the company has no debt as well. Also on the podcast, I have two lists for you. The top 5 most followed companies on Vox Markets in the last 24 hours and the top 5 most liked RNSs too. By the way, you can see both these lists at voxmarkets.co.uk. We also see lots of other things like Powerhouse Energy investor presentation right there on the front page. There's Get Busy hails strong revenue growth in 2020. There's also a video with Salt Lake Potash CEO Tony Sirichik discussing the positive progress at Lake Way. And also, don't forget our COVID-19 index, which you'll see. Biggest follower today is Way Education down 10%, 37 pence. Biggest riser, Tizion Life Sciences up 7.6 to 162.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Andrew Duxbury, Finance Director at Galliford Try, GFRD is ticker there. Andrew, thanks for joining me.
Yeah, morning, Justin.
Yeah, and you've put out a trading statement on this wet day, but it's a bright spot there. It's quite impressive the way it's turning around, and we'll get into that in a bit. Before we do, as always, Andrew, and it's changed a bit, the name is very recognisable, Galliford Try, but tell us what the business is about, please.
Of course, we're a construction company. We work across the building and infrastructure sectors, operating across the UK with sites from the southwest of England up to the Scottish Highlands. And about 80% of our work is with the public sector and the rest in the regulated and private sectors.
Yeah. And so the trading update, it's a bright spot in this otherwise dreary morning. And so tell us, how your sites are performing, because we're still in a national lockdown. And, you've had quite a few throughout the year. So how are they performing at the moment?
Of course. Well, entering this new national lockdown, that has not impacted our trading at all. We adapted our operating procedures early on in the pandemic, really prioritising the safety of our employees, safety of everyone attending our sites, and to ensure our ability to work with social distancing measures and other procedures on site. And of course, we keep in contact with our clients and our suppliers to ensure that we can keep operating in this environment, operating safely and keeping our projects on track. So we're really pleased that whilst we're following all the current government and industry guidelines, we are still able to operate at normal levels. And on top of that, our pipeline of new opportunities remains excellent, Justin. The market is really good at the moment.
Yeah. Well, do you know what? I'm reading through then. Like I said, you finished now the first half of the current financial year, following full year results update in September. And I was going to ask how things are going. I was reading through it, though, and I saw even your cash update, and I thought, cash level. I checked your valuation. I thought, am I reading this right? So your cash level is above your valuation, is that right?
That's right. So, I really focus on our average month-end cash, and our average month-end cash for the 6 months to the end of December was £157 million. So we're in a really good position. We entered the financial year, 1st of July, we're a June year end. So we entered the financial year with a really high quality, carefully risk-managed order book with 90% of this year's revenue already secured. And we've improved on that position. So the order book has increased from 3.2 billion at the end of June to 3.3 billion at the end of December. And the key contract wins in the period are all aligned to our strategic priorities and, importantly, to our risk appetite. And the statement today gives some examples of some of the new framework appointments. And frameworks are an excellent route to market for us. The pipeline, as I said, remains strong, supported, of course, by the government investment into infrastructure and into the built environment, part of the government's response to COVID. But we're also seeing good private sector opportunities. And then, as you say, Justin, we've maintained that really strong cash position. That month-end average cash for the 6 months, 157 million, alongside our portfolio of PPP assets. And the end of December number was £209 million. So you put all that together, and we're expecting to report a return to profitability, and to resume our dividend payments when we put out our interim numbers in March.
Yeah, well, normally when I see a company that has cash normally above its valuation, I thought, okay, they've got a lot of debt, but you have no debt. I thought, okay, they're massively loss-making, but you're heading towards profitability. So in my mind, it's all heading in the right direction. So, stepping back now, what are your priorities at the moment then, Andrew?
Sure. Well, look, and we are very well positioned in our core sectors, education, defence, highways, and so on. And with that great order book and strong balance sheet, and that balance sheet, Justin, really helps us in the market to win work. Our clients are really, really valuing that. And our strategy is focused on retaining that solid platform for sustainable growth with a real focus on risk management and commercial discipline. It's then on improving our operational performance to drive that margin progression. And it's really all about delivering strong, predictable cash flows and quality margin growth. And alongside that, Justin, we continue to focus on our values. So, for example, on our people, on operating sustainably. And we really believe that being a people-orientated, progressive business creates long-term value for all of our stakeholders and our clients.
Yeah, absolutely. Before we get into the 3 reasons why someone should hit that follow button, anything else to add there, Andrew?
Well, I'll just reiterate, we're well placed. We've got that strong, well-capitalised business with cash, no debt, that great order book. Our core sectors, they will benefit from the increased government investment, which we're already starting to see that coming through. And we've got that clear strategy in place to deliver long-term value. We expect to resume our dividend payments this spring. Justin, I should mention our half-year results will come out on the 4th of March.
Mm-hmm. Yeah. Good. Okay, and I suppose within that you had more than 3 there, but if you had to pick 3 out in summary to why someone should hit that follow button and start receiving your news on Vox, what would they be? What's the main 3?
Okay, well, so number one, the balance sheet. As I say, that balance sheet really creates opportunities for us and working with our clients. Number 2, our real strong focus on risk management and the reflection of that in our order book. That order book is what's going to drive our margin growth in the next few periods. And thirdly, as we've mentioned, that return to profitability and, importantly, resumption of dividend payments this spring.
Excellent stuff, Andrew. Good to chat to you, and hopefully we catch up in the not-too-distant future. Thanks very much.
Excellent. Thanks very much indeed, Justin.
OK, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. At 5, Argo Blockchain Mining, down 13.3% to 81.50. At 4, Rambler Metals and Mining, up 8.64% to 0.415. At 3, Oriel Resources, down 2% to 1.225. At 2, Greatland Gold, down 13%, 29.13. And at 1, the Pineapple Power Corporation. A lot of power in pineapples. It's down 11%. Do you know what? Part of me wants to take a punt in that just because it's a Pineapple Power Corporation. Down 11% to 11.6 pence. All right. Top 5 most liked RNSs are as follows. At 5, Galliford Try. Of course, Andrew's on the podcast. At 4, Predator Oil and Gas. Pilot CO2 EOR Trinidad results and operations update. At 3, IQE full year trading update. At 2, Totally dividend declaration. And at 1, Open Orphan expansion of volunteer recruitment centres. By the way, what's the most viewed? Most viewed is Supply Atme Capital, Sharia compliant, platform officially approved. Tiziana Life Sciences, AIM delisting and admission to the main market. Greatland Gold, initial Scallywag results, new targets identified. Synergen home trial recruitment completed. And Tiziana again, B. Riley Virtual Oncology Investor Conference. That's it for the podcast. Thanks for listening. Muchos apreciados.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.